Hello, Amber.
Hey,
Good
hey.
morning. Happy Saturday.
Yes, yes.
Yeah, thanks for spending your Saturday morning with us to talk about taxes. So I see several people come online now. Oh, yeah. Hi Monica, hi Iris, and then hi Afgal. So yeah, today we're gonna talk about all about taxes. So Amber is a tax professional here in the Philippines. She's similar to me, but she does this full time, so she has a lot more expertise than I am. And then like I usually will refer some of my clients to Amber if I it gets a little bit more complicated. So me and Amber met on Facebook. She's been really helpful. We became friends, because she's been really helpful to me. So she's a good person to be friends with and to be connected with about tax. So Amber, why don't you introduce yourself and tell people more about what you do, and then yeah, and then just overall what you do and help people with.
Okay. So I'm Amber, the tax lady. The name of my company is Whitehead Tax Financial Services. And I've been in the business. This is my 8th year in the business, but I've been doing taxes over 15 years. I'm also an IRS enrolled agent. What I do is my niche is helping small business owners, especially the startup ones and the service industry ones. So people who are just only one employee themselves, basically. Graphic designers, landscapers, those type of people. I don't really work with retail or a whole lot of real estate clients and things. I kind of just stay in my lane. And then also, of course, the individual taxation of as well, helping educating individuals how to really maximize their taxes being a W-2 worker, because there's really not a lot that a W-2 worker can really get when you are doing taxes for deductions.
Yeah, so we'll talk more about that because I get a lot of questions from entrepreneurs and businesses like, oh, how can I lower my taxes, W-2, whatever. So we'll talk more about, like difference between entrepreneur and then W-2 shortly. So okay, so for people who doesn't know what enrolled agent is, so we'll just clarify. So enrolled agent is a designation given by the IRS. So you have to pass three tests to be able to get designated. And every year you have to keep taking our CE test. So I actually do for take two more classes because I want to get one class every month. Otherwise, then everything will be loaded in one month, and you can't keep up. So IRS, so there's CPA as well, but CPA is very broad, and then some people focus on taxes, some people go corporate auditors, whatever. So enrolled agent, all we do is just taxes, and then it is a designation by the IRS. So
Right.
so I was just wondering, Amber, like how did you got into taxes? Like I'm just curious. I don't think we ever had that conversation. Like, why this profession?
So, I really been doing taxes since I was 16 years old. Like, I never went to anyone to file my taxes before. I've always done it. It was just something that I ended up liking
Mm,
at such a young age. And so I decided to go to college for it and work at CPA firms, work at some of the big commercial tax firms. And then
mm-hmm.
one day, I never really wanted to be a business owner. It was just something that I just wanted. I actually just wanted to be a partner
Oh,
in a CPA firm. That was like my goal.
mm-hmm.
But I suffered
Yeah.
unemployment for like 2.5 years. And that's what gave me the
Wow.
aha moment to say, you know what? I never want to be in a position where someone can take my job away from me and I don't have
Yep.
anything to fall back on. So
Yep.
that's when I really got serious about it and just started building from there.
Yep. Got it. Got it. Yeah. Cause like wow. Yeah. Monica said 16. Wow. So yeah, I know like with when you work in company, I mean you can get laid off anytime, right? With entrepreneurship, our problem too is that like coronavirus, like some like restaurants, like the amount of businesses that might be taken away. So that's why for me, I try to diversify all my different services too. That's why I do LinkedIn coaching and then some tax preparation, mostly for my clients, and then financial coaching. But I try to diversify as well. And then now I'm doing the online coaching. So it's very important to diversify that because different things happen, right? Okay. So
Yep.
there then it asks, does Amber work with small 501(c)(3)
No,
do,
actually I have not really. I have one client that is, but I'm not heavily expertise in that. So if Danette is willing to kind of work with someone and we can grow together and learn the whole process, I'm definitely up for it, Danette.
Yeah. So then it's some stuff about taxes are very specialized. For example, foreign taxes or like
Mhm.
foreign income. So, some tax professionals don't even want to touch that if you have a lot of foreign income because those can
Right.
get tricky, right? Like I
Yes.
don't even. I was like, okay, yeah. Like I
Yeah, I don't
remember
even do it either.
yeah, there was one prospect who came to me. He was telling me that he was from Qatar, and Qatar apparently doesn't tax their local if you have a rental property there. But if you are in U.S., you will get taxed, right? So he has not been reporting the rental income for the past 10 years. So
Ooh.
I told him, yeah, I think that's out of my scope. You should probably go to
Right.
tax attorney for that one.
Right.
That sounds serious to me. So I don't even want to touch that one.
Right.
Okay.
No, I don't blame you.
Yeah.
I wouldn't touch it either.
Yeah, Danette said I'm willing to work together. So Danette, Amber isn't on LinkedIn as much, but you can connect with her Facebook. But Amber will tell you how to reach out to her afterwards. Okay.
All
All
right.
right. So we're talking about this hot new topic right now, pending appeals case for health penalty reversal. So why don't you walk through that? What is that? I think most people probably don't know anything about this. So and then
Yeah.
share with people what this is all about.
So, as you know, when the whole Obamacare came out, you had to have health insurance from 26, well,
Mhm.
actually 2014, I believe, all the way up until 2018. And if you did not have health insurance in those years, you were assessed a penalty. So,
Mhm.
there's one, I think it's circuit, the Fifth Circuit, which covers Texas, Louisiana, and I forget the other state. They went and they caused this whole uproar, and it's like, hey, this is unconstitutional. This needs to be reversed. So at the local level for the Fifth Circuit, they were able to basically kind of get it approved. But now it has to go to the Supreme for the Supreme Court as an appeals for all 50 states to be able to have that reversal. But what's so important about it right now is that 2016, as you know, the IRS says you have 3 years from the due date of the return or 2 years from the day that you paid your taxes to be able to ask back for a refund, right? So typically for 2016, it would have been April 15th would have been the deadline, but now it's July 15th because of the whole COVID-19. So
Mhm.
what we are doing now, we are doing what we call protective claims for 2016, right? Because if you do that, then you protect yourself from being from not having the ability to not recoup that refund, right?
Mhm.
So it has to be all filed and postmarked by July 15th. Now, it's not a guarantee that the Supreme Court is going to, approve this, but what is guaranteed is that if you do not do a protective claim on your 2016 tax return, that if they do approve it, then there's no other recourse for you to recoup that money. So it's kind of like a risk at the same time, but the way how Trump is, seeing as though he really didn't really like the whole Obamacare thing, I have a feeling that it may pass, but that's just my own personal opinion. But at the end of the day, they still have to, pass it and have him sign it off or whatever. And that could happen next year. There's no deadline on when that could happen. But because 2016 is running out of this statute, it's best to try to put it in now.
Yeah. So you're saying this is the credit, right? Like for people who are like I'm on Covered California or people marketplace insurance, so they can get the credit for this the health insurance if they.
No, it's when you did not have health insurance.
Oh, so you have the penalty. So
Yeah,
basically then you can reverse the penalty, but then you have to file for it
right.
till. Oh, okay, okay. So yeah, so everyone, if you're in that place like marketplace insurance, so if you have issue with that, so reach out to Amber and then she can definitely help you with that. Okay.
Yep. So again,
So now
it,
mhm,
no,
go
I
ahead.
just want to make it clear that it's for people who did not have health insurance and got
Yep.
assessed that penalty. And I know for 2016, the penalty was $695. So you will
Hmm.
potentially can get that back if you were able to do this.
Oh, very cool. Yeah, that's still some money. Okay, don't let that
Yeah.
lose $700. Okay, so the exciting thing is that okay, so this is my frequently question, right? So I have a lot of employees coming to me. They always ask me, it's like, why do I have like this such a big, like I owe so much money? But first of all, their big mistake is that they didn't adjust their withholding.
Right.
So they like, yeah, like for example, people who may you they have RSU and then like the bump up their income to $300,000, and then most of the time the RSU, like I think the default is only 20%, 22%. So sometimes they have to take payroll to actually adjust it the more, especially if you're in the higher tax bracket, right? Then you might end
Right.
up owing a lot more, so you have to adjust your RSU to withhold a lot more percentage than whatever the default is. So aside from that, like there's the 401k. If you do the traditional 401k, you can get deduction from that, and then you can deduct from your mortgage interest. Although that's capped at a certain point now, right? So because of
Right.
the change for the mortgage interest and property tax, unfortunately, sometimes if you live in a high income state, a state with high income tax, then you lose out on the property tax deduction too because of a $10,000 cap, right? So
Right.
so yeah, I mean, what Amber, so what do you think? Like, what other ways can W-2 employees help with taxes besides the one that I just mentioned about?
So one of the things, like you just said, for the 401k, I always tell my clients to max that out the most because those are pre-tax dollars, and that's going to
Mhm.
be your taxable income. So the goal is to bring down your taxable income as low as possible. And then
Mhm.
another way too, if you do have a lot of medical expenses, then definitely contribute to the HSA because that's again another pre-tax money that will reduce your net income. So I always say things like that, and then also open up an IRA account because you can take that deduction, every single year,
Mhm.
aside from your job. Another
Mhm.
thing I always tell people to do is do that paycheck analysis. I always say do start it in July because now you have the first 6 months to really look at and forecast and see where
Mhm.
you're going to land at the end of the year. And then that is when you could really do damage control and see what you need to do to
Yep.
minimize, if you feel like you're going to owe, if it says that you're going to owe. So those are the type of
Yep.
things because right now a lot of people can't itemize because of the double of the standard deduction. So it takes a lot of people out of that. So I know before everybody was so happy to get a home because there's like, yeah, I can write
Mhm.
it off. But now
Mhm.
it really doesn't matter now.
Yeah. And then I wanna add to that, like the 401k, yes, you wanna max out if you can afford it. But
Right,
sometimes my clients, they have credit card debt, and then sometimes that will have to take precedence because that's 20%, and then sometimes they can't consolidate that credit card because their credit score is not that good. So I do tell them at least match it. If the company matched 3%, at least contribute 3%. You don't want to lose out on the free money. It's 3%.
right,
So and then like if they and then slowly as they pay off their debt, then they can slowly increase their contribution. And also for the IRA, traditional IRA outside of your 401k or outside your employer, anyone can open a traditional IRA or a Roth IRA. But then that's all income dependent too. So if you make too much money, your traditional IRA will not be deductible. But you can
right,
do a non-deductible traditional IRA contribution. Then you can do a backdoor Roth IRA conversion. But you have to do it right. Okay,
right,
so you
right,
need to talk to a tax professional. Like I've had prospects who they come to me. They try to be smart about it. They Google it up, but what ends up happening, they just mess it up. All the like they want, oh, I can do backdoor Roth IRA conversion, but they don't understand the process. So please talk to someone. Talk to me. Talk to Amber about that. Okay, so don't try to smart your way into googling certain things, especially with the Roth IRA conversion, because those can get pretty tricky. Okay,
right. Yeah, it
so
does.
yeah. Yep. Okay. So employee, W-2 employee. So let's say, okay, I do get this question too. And before I became a tax professional, like I was also wondering, like, can you save more money or make more money being an employee versus an entrepreneur? So what do you have to say that? Let's say you make $100,000 gross income as an employee, and then can you still do you think you can get more money making $100,000 as a self-employed? So how do you explain the difference when someone's trying to like differentiate? Oh, should I be a solopreneur versus an employee? So I have my own opinion too, but I want to hear your opinion on that,
Okay.
Amber.
Well, I always suggest, especially in the beginning, to do it as a hybrid. Keep your full-time job while you explore your entrepreneurship because at the end of the day when it's time to file your taxes
Mm-hmm.
there's going to be a loss. I mean, at least for the first couple of years it's always usually
Mm.
a loss within a
Yep.
business, so
Mm-hmm.
that will offset your
Mm-hmm.
tax liability on your W2 side, which would mean that you could probably actually have less taxes taken out of your job
Mm-hmm.
because
Mm-hmm.
the write-offs for your business will be able to offset that and you could probably break even.
Mm-hmm.
So
Yeah. Yep. Luckily, I think like for coaches, I actually didn't have much losses. Well, the first year I didn't have because like coaching is easy to get into, but then Amber's right. I will totally agree that if you're gonna try a side hustle, keep your full time job. Okay. So a lot of people get too excited. I'm gonna quit my job. Clients are gonna come in. Clients gonna love me. It's like, yeah, right. So it's like a lot of them, they don't understand being in business. Like 80 to 90% is working on the business, which is marketing. Like
Right,
you have to show up on social media, your branding, all this sales, all the stuff, customer service. You A chunk of your work is on that actually, and then like maybe it's even only 10 to 20% of your time is client facing. So a
right,
lot of them, they don't enjoy the working on the business, so you have to separate the two. Work, you're an employee, you have a full-time job, then at least you have the luxury of time to try that out on the side. So
right,
keep your day job, and then try it out, and then see how it goes, and then slowly build up from there. Have the patience,
right,
no matter if you hate your job. Like I hated my career at that time, but I still stuck through it, and I'm so glad I stuck through it, because I would never have been as successful if I had just quit my job. I would probably have
right,
been like depressed, or, oh, I'm not making money, all these losses, I have to take money from my savings, so those will be very stressful. So
right,
good
right.
point. Yeah. So okay. So oh yeah, so how are we managing COVID now? COVID-19, there's so much, so
Yeah.
go ahead.
Yeah, I mean it's crazy, but there's a lot of, things that's happening with the government as far as they gave us the stimulus, well, the economic impact payments. They were doing that. And just to talk about that, I want to let everyone know that they stopped issuing checks for the stimulus. So if you have not received your stimulus check yet, um, please make sure you do not throw out your mail because it looks like junk mail. It comes in a plain white envelope with a credit card in. So
Mhm.
you probably think it's like a credit card offer or something like that. You probably just trash it because it doesn't say the IRS name or anything on there. But there is a number if you do think you threw it away. There is a number that you can call to have it reissued to you,
Mhm.
and they actually um, eliminated the fees for reissuing because they saw that a lot of people were, throwing away their stuff and not knowing that. So just pay attention to that. I know they're in talks of
Mhm.
another stimulus that's supposed to be coming out, but again, it still has to be finalized. Probably won't happen until like July, maybe. But and then they're also talking about a $4,000 incentive for people to travel too. So there's a lot of things that they're trying to do to appease the
Yeah.
people because the travel
Yeah.
industry was one of the industries that was hit the hardest. So to give them that insight,
Oh.
give them that kind of incentive, vouchers to travel and do all this is
Mhm.
good. Japan actually started it in July. They're actually giving their people $190 a day to go to certain restaurants and hotels and things like
Mhm.
that.
Mhm.
So there's
Mhm.
a lot, but COVID was definitely hard. You had unemployment. Some people haven't even received their first unemployment check yet. But be patient. That extra $600 is there still. So we just gotta just be patient and wash our hands.
Yeah, yeah. So, oh, Monica has a question, but before I get to the question, so they allow you to travel. Is it that's domestic or international that they're trying to encourage you to travel?
I think all the details hasn't really come
But
out
is
in
it?
full yet because it's still got to be passed. It's
Oh,
just an idea that they're talking about now that I was reading about.
oh.
Hmm.
Yeah, okay, I guess it's encouraging people. Hey, things are back to normal now. So hey,
Right.
there's a credit, and then I don't need to be incentivized to travel. I'm gonna travel if the the rest of the world is open. Okay, so Monica asks, if I'm a W-2 employee and I have a small business on the side, how should I arrange to have less taxes taken out? So I have my answer to that, but Amber, you go ahead first.
Well, it all starts with your W-4. And now with the new W-4 that's out, it's a little bit more trickier because before on the old W-4, you could pick 0 through 9. And of course, 9 would be the less taxes was taken out. But because of the new structure, it's kind of hard to figure that out. It's kind of like a trial and error. So I would consult with your tax professional, Monica, and ask them how to fill out the new W-4 to give you that advantage.
Mhm. Yeah, so I think if I understand you correctly, Monica, please correct me if I'm wrong. So if you have a small side business on the side, you're W-2 employee, so you have to first answer the question, is that small business making a profit? Okay? So you are only taxed on your net profit. So that's your gross income minus all the expenses, the net profit. So let's say it's a $5,000, your expenses was $2,000, so your net profit is 3,000. So you still have to pay self-employment taxes on that $3,000, 15 point something percent, plus federal income tax, plus state
Mhm.
income tax depending what state you live at. If you have a profit, you actually want to withhold more from your
More, right,
W4 on your employee. If you have a loss, depending on how much losses, I mean, if you're just starting out, if it's a small business, then it might, if it's not a lot of loss, then I probably wouldn't worry so much about reducing my taxes on your W-2. Then you might get some refund back. But if it's a huge loss, then yeah, you might want to change the W-4. So that's my opinion. So hopefully that's clear, Monica. You can always message me if something's not clear. Okay, I know we're connected, and Monica shared one of my live the other day. Okay, so
oh, okay.
yeah, okay. So what's this small business? Okay. So when you say small business, do you mean just the solopreneurs?
Yeah, just pretty much, yeah. Yep,
Mhm.
the sole owners. So some of the tips I have for them is definitely one, the biggest tip that I have is when you are looking for a tax professional, make
Mhm.
sure they have some type of accreditation. Make sure you can find them on the IRS website. Also, make
Mhm.
sure that they have experience in your industry, because I always liken
Mhm.
it to a doctor. You go to your, you get your annual physical, whatever, but if you tell your doctor,
Mhm.
"Oh, I'm having a heart problem," they're not going to continue still servicing you. They're going to refer you out to a cardiologist, a specialist. So that's what I feel all small business owners need to do is they need to ask those questions to see, hey, are you familiar with this industry? Because that way they can give you the most tax deductions available. But if you're just dealing with someone who just does basic stuff, just give you your mileage, your cell phone, they're not really helping you out because they don't know what is needed to be done.
Mhm. Yeah, like Amber said, so you have to research them, and then unfortunately, okay, so for any tax professional to charge you money, so it all depends on the state. So the minimum, so for California, we're a little stricter. Like there's very few states, like very, I don't even know, you can even count with your finger, like very few states require accreditation. Like for
Right,
California, we are required. So we have, I started with it's called, you have to be California registered tax preparer,
right,
CRTP. So we have to meet a minimum of 60 hours to be able to get that. So a lot like people who work for like, H&R Block or those places, like if they do your taxes, they have to be at least that. So that's the minimum. But not all states are like that. They can technically have no credentials and still charge you for money. Okay, so then
hmm,
you're gonna have to do your due diligence. Like, what is this person's experience? So I'm not all about you need to have all these titles, whatever. So I think there are some really good tax professionals who might not have the credentials, so for whatever reason, but you need to do your research because they don't it's very very few states that actually require some sort of credentials. And I don't know about your state, do they require that to charge
well,
people?
they actually started it last year. You had to register to get a permit. Yeah, but
Got it.
before it was totally anybody could just hang up a shingle and say, "I do
Yep,
taxes."
exactly. Yeah, so it's unfortunate. Like I did actually ask a professor. Like I went to this school. Like I was looking at the masters in taxation program. So I was asking the professor, why doesn't the IRS implement that? Like to require all states to have at least credential if you're
Right.
gonna charge tax. But then like she went on like, yeah, I don't want to get into the politics. There are some issues between the IRS and the Congress. So she she didn't want to get
Oh,
into that. So they didn't want to put too much power to the IRS to have that. So that was her opinion. So anyway, so that's the minimum, and then the second tier is the CPA, which I already explained. So CPA and enrolled agent, they're kind of on the same level that we can represent anyone in front of the IRS. But
right,
CPA is very broad. It will take you longer to get that. And then like they have a wide knowledge, and then some people specialize in taxes, some people specialize in corporate audit, or go to corporation. And then enrolled agent, which is us, and all we do is just taxes. So
right.
okay,
Or
so
resolution.
yeah, okay. I don't want to get into that. So I think that's what you're trying to do, right? It's like, no, I'm not gonna do resolution. I can if I want to, but I think that's sort of
I
big
love it
myth.
though.
But then, really? Really? Oh,
Yeah.
okay. Then I can refer them to you. Okay, so small businesses. What other tips do you have for people who are in small business to save on taxes? Let's say for full time entrepreneur, like okay, so if someone come and ask you, it's like, should I open an S corporation? So for people who doesn't know what an S corporation is, so if you everyone always confuses. They're like, I have LLC. Do I do do I do a individual or do I do a corporation? I
Right.
said LLC has nothing to do with your taxes. It's just a legal entity. Okay,
Right.
nothing. The only time you need an LLC is when you're trying to open a corporation. That's the only time, right? So then the sole proprietor, if you ask them like, why do you have an LLC? Like, I don't have an LLC because it's very expensive here in California. It's $800, but it's like,
Oh wow.
I mean, I just didn't see the value, at least for me. So basically, yeah, it's Schedule C is a sole proprietor. So if someone asks you like, when when do I need to convert to an S corporation? If they ask you what is the benefit between the two, so how would you explain that, Amber? Like, when would you tell them to actually start thinking of converting to S corporation? So another big difference between S corporation and sole proprietor is that S corporation you can save on some self-employment taxes. So correct me
Right.
if I explain something wrong, Amber, but let's say you have let's say you made $100,000 gross income and your profit is $50,000, and then so self if you're self-employed and sole proprietor, that you will pay self-employment taxes on the $50,000. But if you're
Right.
S corporation, you can pay yourself a salary. Then you just
Right.
pay the self-employment on the salary, and the rest will be on just the regular federal and state income, right?
Right.
Is that correct, Amber? Yeah.
Correct.
So
Hmm.
like so then when do you advise people like to convert to S corporation? How do you explain like what is the benefits between the two?
Okay. So the where I look at it is I look at how much you are paying in self-employment tax, right? Because
Mm-hmm.
that's what you really are trying to avoid. So I at least typically look at if you're making at least profiting net profit of 40 grand or more, that is when I would say to start to
Mm-hmm.
have that conversation with your tax professional, right? And you want to look at that self-employment number. So I don't know off the top of my head what the 40 times the 15% is, but I think it's close to like 4 grand. So, or no, more than that. But anyway, so you look at that number, a minimum to have your 1120S filed and your 1040 filed is going to at least cost $1,000 minimum, depending on where you go,
Mm-hmm.
right?
Yep.
Then you
Yeah.
have to factor in who's going to do the bookkeeping, who's going to do your
Mm-hmm.
estimated payroll taxes and all that. If all
Mm-hmm.
of those expenses exceed that self-employment tax number, then it's not worth
Mm-hmm.
it because
Mm-hmm.
you're not saving any money because you're giving that money to someone else. So you're really not technically
Mm-hmm.
saving anything. But if it's a drastic
Got it.
savings,
Yeah.
then it makes sense to convert
Yeah.
over to be an S corp. So that's how
Yeah.
I
So
explain it.
tell me, like, okay, so tell me and estimate how much more is that cost. So okay, so instead of let's say $300 to $500 for your individual taxes only, and then S corporation, you have the individual. Remember, you have to pay for individual, whatever, 300 to 500 or however that much. Then on top of that, you have to pay for the S corporation taxes, which is Amber said $1,000. So that's additional 1,000. And then you said the bookkeeping, like how I don't know how much that is because I don't hire a bookkeeper. So however that much is, and then like you said, the payroll taxes. Those three things are the biggest additional expenses for S corporation, right? And on top of that,
Right.
LLC fees. So
Right.
I live in California where it's very expensive. A lot of things. It's $800 a year. So depending, some
Yeah.
state actually is very, very cheap. So you know, so you have to add all of that and then see like, does that save you more money? Like, is it cheaper than the 15% on self-employment taxes you have to
Right.
pay? So you have to do the analysis, and then sometimes that can be very complicated. So reach out to someone. You can reach out to me or to Amber or whoever tax professional that you can trust to do this analysis. Okay, so
I
there's a lot
can't
more to it. Go ahead.
I can't believe you all pay $800 a year. We pay $50 a year.
Yeah, talk to the California people here, okay? So I live in Silicon Valley, California, where it's like everything's expensive here, okay? Maybe I should just move somewhere else.
Yeah, move to Connecticut.
Oh, all right. Okay. So yeah, guys, if you have any questions about taxes, please feel free to ask. So Amber, so what are like I'm just curious, like what are the common issues usually people come to you for? Like, when it comes to taxes, like common problems you've seen them, like common mistakes that people normally usually do on their tax returns. Or like just in general, like throughout the year.
Yeah, so one of the biggest things that I've come across and had to do several amendments for is people who have rental properties.
Oh.
Their tax professional is are not deducting the depreciation. They're not claiming the depreciation on the rental
Mm-hmm.
properties. And
Oh,
they're
yeah.
like, I didn't know I had to do that. My tax professional told me that I would have to pay that back if I was, you're going to have to pay it back regardless. So because the IRS
Mm-hmm.
looks
Yep,
at
yep.
it, the depreciation recapture tax
Wow.
is whether you take it or not, we're still going to assume that you took it. So you might as well take it. So I've had to go back and amend several years of returns because that's a huge area that is missed a lot. Another thing that people come to me for um, is that their tax professional is not knowledgeable of all the tax deductions that a small business employee can take.
Mm-hmm.
So I've been able to review people's returns and see, oh, you missed this. And one of the biggest thing, and maybe you don't even know this, Christine, with the home office deduction, a lot of people are calculating that the wrong way. You know, we're told the total square footage of your home and then the area that you're in. But what they fail to mention to
Mm-hmm.
you is you have to back out your entranceways, your staircases, your hallway, your deck, all those non-livable spaces. Once you back that out, then you have a higher percentage, and that extra 1% can give you another $50 or so. And I'm all about not leaving any money on the table for the IRS to take. So if I can get
Mm-hmm.
an extra $50 by doing that simple calculation, then that's how I'm going to do it. So I'm awfully doing redoing people's home office
Mm-hmm.
expenses, um, way to calculate their mileage. They do that wrong. So I'm always constantly, figuring out things to give my clients a better deduction on self employment side.
Mm-hmm. Yes, and also to note, like to deduct your home office, like you have to use it exclusively for taxes on, I
Right.
mean, for your own whatever business only,
Business.
right?
Yep.
So for me, like my office here, right? I don't use it exclusively for my business, so I actually don't deduct because and the reason I don't do that is also because we own this home, so I just don't want to have to, get it my taxes to be complicated and I have to like deduct and then like they don't when we swell, we have to like do that whatever the division, like because you have to split that up when you sell, so I'd rather just not have to deal with that, so I actually don't deduct my home office, but that's
Oh
for me. But i
wow.
think but I think when you rent at that home, well, I also don't use this exclusively for my business, so it's
Yeah, but
not
you can
exclusive.
section it off though. Whatever you
Hmm.
don't, your little area, you can just still section it off and still get a little portion of it. It doesn't have to be the whole entire room.
Yeah, that's true. That's true. But I just don't want to have to make my taxes too complicated, and then like weigh the pros and cons already, so it just wasn't worth it for me. But I think like if I was renting a place and then like there's a particular area, then you do want to deduct it, and it has to be exclusive just for
Right.
your business. Yeah, and then
Hmm.
like oh yeah, I want to talk more about the depreciation. That's so important. Okay, so a lot of people think depreciation is free money.
No, it's not.
Deduction. Like they always say, yeah, okay, if I have like whatever, like I'm gonna depreciate whatever, and then I don't have to pay it back. But no, you have to pay it back. So depreciation is like you calculate like that's the cost of you the asset, right? Depreciating it over time, and when you sell it, you have to pay that back, whatever that is. And then they always think it's free. So Amber, why didn't you explain more about what depreciation is about? That's actually a pretty complicated topic, and then like it's there's a lot more nuances to that one. So in summary, like what can you say about depreciation, Amber?
Well, depreciation, just a high level explanation
Mm-hmm.
of it is every asset has a certain useful life. Like so for rental,
Yes.
going back to the rental properties, you depreciate your rental properties on 27.5 years. That's the
Mm-hmm.
allocated, amount for that. If you have a home office and you're depreciating your home, that's 39 years. So you have to kind of look up whatever asset you're trying to depreciate. Even cars have a depreciation. I think cars are what 5 years. I'm not quite sure on
Mm-hmm.
that one. Um, but yeah, so you're taking a deduction every single year based on so if your house is $100,000, then
Mm-hmm.
you are depreciating that over 27 and a half years for the rental property. So you're able to take that deduction every single year until one, you no longer have the rental property anymore, or you sell it, or you just stop using it as a rental property. So that's how pretty much that it works. So it's a deduction you get every year.
Yep. And then when you have to sell it, you have to pay back. And then depreciation, like so depreciation lower which tax, your long term or your income?
Say that again.
Your depreciation lower your income or your long term? Like what does that lower? And I think there's also a cap as well with the depreciation, like how much losses you can
Yeah,
take out.
well, with the depreciation, it lowers your income, your taxable income. That's where it
Mhm.
affects it at. So again, with the rental
Mhm.
property, it's a deduction against the income that you're receiving. With the home office, is another deduction that you can take. With the home office. So at the end of the day, they're all will can lower your taxable income.
Along these lines,
Oh no.
is there any way I can get a copy of my 2005 and 2006 returns?
2005 and 2006, they may not have it because I know they have up to 10 years. You could call them, and I think they have to do another process where they have to um, go into their what's the word? I can't think of the word, but they have like another department where they can try to get that, but it'll be a while. But you can still call and try.
Well, not right now, right? Because like they're still not in full service
No,
at the
no,
moment, are
they're
they?
open. They're full
Oh, they're
swing
they're
now.
they're oh, okay. Because like I've had several people, because I also work for TurboTax part time, just to help out and then get more experience as well. So I a lot of the calls I've been getting lately is, where's my refund, the one that they refiled a couple of months ago. So there's still kind of backlog, it seems, with the refund.
Oh, so here's this. So what I've been seeing is a lot of people were on a 60-day verification hold. So then COVID happened, and then the IRS shut down. So what taxpayers need to do right now, well, starting Monday, they need to call and ask the IRS, because once they call, the whole 60 days going to restart again. It's so unfair. Like, I don't understand why they have to restart it again, because basically you're asking them to go 120 days without a refund when they really need it now. So if you are held up in a verification, call them first thing Monday to find out what's going on, so that way the clock can start ticking on Monday all over again for your 60-day verification. It
But
sucks.
but who are being held off for verification purposes? Is there a trigger that does that?
So sometimes the employer did not report all their wages. So the
Mhm.
IRS is having a hard time matching the wages that the taxpayer is saying that they made
Oh,
versus
got it.
what the employer, because the employer hasn't uploaded their stuff or whatever the case may be. Another thing too is they just sometimes just do it. It's just a random flag just to make sure you are who you are.
Got it.
You have to go through that. So sometimes they send out a verification letter, that you can do online where you validate
Oh,
yourself.
got it.
So, but when COVID all happened, those letters stopped going out, or some people missed them, or whatever the case may be. So a lot of people are, missing out right now, and they just got to call and find out what their
Got it.
status is.
Yeah,
Mhm.
yeah. Okay. Well, that's good that they're in full service now, because like some of those clients who call, yeah, I call IRS, but nobody's picking up. Like I have to on hold for 30 minutes or so.
Oh yeah, you
Okay,
got to call them
cool.
first
So,
thing in the morning. Because if you don't call them
like what?
at 7, if you don't call them at 7 o'clock in the morning, you call them around your lunch break, you're gonna use up your whole lunch break. Because you're gonna be on hold for at least an hour or more, and
Wait.
then you got to prepare yourself for that courtesy disconnect, as I call it. I've been
So,
disconnected so many times. I'm
oh
on hold
my,
for like an hour, and as soon as they click over, they disconnect me, and then I got to call back again. So call them first thing in the
yeah,
morning. It's
yeah,
my
yeah. You're
suggestion.
talking 7 a.m. 7 a.m. PST or EST or what?
7, whatever your local time is.
Oh, there's a local. I thought IRS is. Oh, got it, got it. Yeah, yeah. Then each state has their own time. Okay, so yeah, 7 a.m. call, and then first thing in the morning while you're brushing your teeth, whatever, just call, and then
While you getting ready for work, yeah.
yeah. All right. So if there's no more questions about taxes, so thank you so much, Amber, for joining me. So like, why don't you let people know how can people find you?
Okay, so they can the easiest way is to give me a call, 860-474-3700, or you can visit my website, is WTFSLLC.com. So it's what the F SLLC.com.
Okay. All right. Well,
But
That's
it
a
stands for
catchy
the
name.
initial, but it's the initials of my company, Whitehead Tax Financial Services. But a lot of people remember it by
Uh-huh.
saying, "What the f?"
WTFLLC.com.
WTFFLLC.com.
Oh,
Can I put it in the chat? I don't know if I can.
yeah,
That's why it's
yeah.
easier just to give my phone number
Yeah.
out.
Yeah. I'll just type that in. So WTFF LLC.com, and then and then you are mainly on Facebook, right? So you don't hang
Right.
out a lot on. Okay. Okay. So yeah, find Amber on Facebook too. So Amber Whitehead, and then she'll yeah, and then she'll I don't know if you accept everybody there, but I don't accept everybody on Facebook. So
And
yeah.
send me
So
a message first.
all right. So Amber, and everyone, thank you so much for all your questions and hanging out with me on this Saturday. So I really appreciate it. And then yeah, and then have a good day, Amber. And then I hope to yeah, have a great weekend, everyone. So thank you, Amber.
Bye.
Okay, bye bye.